Dubai's biggest developer just posted double-digit growth across every headline number. Revenue, profit, EBITDA, all up more than 20%. And yet the most important figure in this release isn't any of those. It's a number most people scroll straight past, the backlog. Understand that one line and you understand why Emaar's profit is locked in for years. Officially reported, first half revenue rose 21%, profit before tax 23%, and EBITDA 24%, while property sales stayed strong and the revenue backlog hit a record. My read, an ambiguously strong half, but read it against the first quarter and you'll notice the growth rate is quietly cooling. Fact, in quarter 1 revenue grew 23% and EBITDA 34%. Across the half, those rates eased to 21 and 24%. My interpretation, the second quarter grew more slowly than the first, not because demand cracked, but because Emaar deliberately slowed new launches into a tougher regional backdrop. That's discipline, not weakness. Now, the engine. Emaar books revenue as it builds, so today's profit was contracted years ago. The backlog is future revenue already sold and largely de-risked, and it grew to a record even as launches slowed, because sales still ran ahead of what was recognized. The day sales fall below recognition is the day this backlog peaks. It hasn't yet. The business is genuinely diversified. UAE development is the growth engine. Malls run near 80% occupancy on resilient base rents, and international Egypt and India adds geographical spread. Underneath sits a recurring income base worth about a third of group EBITDA. But be honest about the soft spots. Growth is decelerating. Hospitality is weak on softer tourism, and that recurring base, while dependable, was essentially flat year on year. So is the development engine, not the annuity, carrying growth right now. Management sounds confidence. A new 200 billion dirham master plan, 11 launches, and founder framing it all as long-term discipline. My assessment, this half strengthens the long-term story. Record backlog, disciplined launches, fortress diversification. Before next quarter, watch 3 things. Whether H2 sales reaccelerate as new projects launch, whether the backlog keeps growing, and whether recurring income and hospitality recover. The backlog's direction is the real tell. Record backlog, cooling pace, disciplined by choice. That's Emaar this half.